So we wrap up today's trading session on quite a high at 13,740. That's a solid 1% gain. Definite leadership within the broader universe as the SENSEX gains about 500 points. Media, real estate, IT, there have been no shows today, while the Nifty Bank, Pharma, services, infrastructure, they've definitely taken leadership. The broader market has fizzled out by the time we wrap up, but there's a number of interesting movers within the frontline index. Check in on Tata Motors, Sun Pharma, RIL, wrapping up at 1994, IOC, HDFC, ICICI Bank, GAIL, Bajaj Finance and HDFC Bank. Infosys, Wipro sit it out, Nestle down 1%, ICICI Bank in the red, L&T, Bajaj Finance and Dr. Reddy's as well down about 0.5% or so. Some of the news makers then, you all had Vedanta in focus as reports indicate that the promoters buying share stake in the firm via the open market. Ambuja ACC, huge gains after the renewal of the tech fee agreement with Wholesome. It's been a rollicking start on D Street for Mrs. Bector with a solid gain for that candidate. Among some of the other newsmakers as well, you had something like MCX, which is on the brokerage radar. Media companies, the government revision on the rules for the DTH license fee, that's kept those stocks in focus. Within the broader universe, you've got First Source spiraling up near 15%, ITDC, Whirlpool, Johnson Control, India Bulls Ventures, BEML has a terrific run today, Jubilant Life, Suntech, Fine Organics, as well as ABFRL are some of the outperformers. Meantime, it's Lemon Tree shaving off about 5%, KPIT Tech, SpiceJet, Bombay Dyeing, PVR, Indian Hotels, Mahindra Holidays and Bajaj Bharat Forge, that have dwindled down by the time we wrapped up. But for the index, it certainly has snapped that 7-week gaining streak for this entire week gone by, and the volatility index has posted its best week since the 1st of November. 13,743, that's where we ended. Naresh, a quick comment?
The market continues to surprise in terms of the momentum, what we are seeing right now. Say on Monday we were at 13,200 odd levels, and we are back to almost we've hit the same highs which has been the resistance for the last whole week, so 13,770 odd levels. And what we've seen is sector rotation in terms of the heavyweights which were slacking in the last couple of sessions. So we've seen Reliance pick up steam. We've seen that happening in HDFC Bank as well as HDFC Limited and Kotak. But we are very critically placed in a lot of large weights. So 2020 for Reliance is the recent high of Monday. Similarly, 2500 is an all-time high for HDFC Limited. 1465 for HDFC Bank, and this comprises 30% of the Nifty. So going forward, we'll be watching these levels on the upside. Similarly, the recent lows on the downside. So if we start cracking below that, that is where we take a trend change. So we are right in the box in terms of the next move will be decided by these large three heavyweights. So we'll be watching Reliance, HDFC Bank for price action next week if they can follow up on the upside, or again we are getting into a sideways zone only for them.
Okay, well, what a nice close to the markets this week as we head into the Christmas weekend. Nifty, Sensex both up over 1% and 13,750 almost on the Nifty at close. Advanced decline ratio clearly in the positive. Reliance, one of the big contributors today. Financials were in play, and metals, Vedanta in particular, of course, in the news. Auto also seeing some amount of catch-up coming in. So it was an exciting day. We've got one more week to go before we close out, and while everyone's looking for consolidation, markets don't seem to be stopping their move higher and definitely just seem to be seeing a stronger build up towards that 14,000 mark of late, and brokerage upgrades also indicating that they're anticipating things to continue to remain positive as we head into the new year. Naresh, thanks so much for joining us this afternoon. Do have a good weekend, all of you, and from the rest of us here at ET Now, for this leg of the show, we say goodbye. Thanks so much for watching.